Good morning, and thanks so much for tuning in. You're watching Trade Talk on Wiki Prime. My name is Alex Matthew, and with me, as always, is Hiral. Morning, Hiral.
Good morning, Alex.
Well, yesterday you saw quite a bit of a pop in trade, and that was, I think, on account of the global cues, which were very supportive. There is some talk of increasing work in China towards spurring the economy there, and that is having a bearing on commodities. It is having a bearing on metal companies here in India, because that expectation that global trade will improve with an improving China is playing through.
Absolutely. And if you see in terms of the US markets as well, the month of July has seen a good run overall in terms of Wall Street. If you see the kind of performance NASDAQ has given out, if that can be mirrored in terms of the IT sector in India, that's going to be a spectacular run that we will be able to see as well. But whether we will mirror global markets or not is what we need to wait and watch. But clearly, yesterday's session, Alex, has been a better one as compared to the previous couple of days, because we've seen that up move and that conviction that started to come back.
No, certainly. And in fact, like you pointed out, 2 down days. But in trade yesterday, you still saw foreign institutional investors that sold on a net basis, and you saw quite a bit of buying by the domestic institutions. And whether or not that support will come in once again, remember, quite a bit of the run towards 20,000 has been supported by the foreign institutions. So whether they come back to buy is a question.
Absolutely. Whether the 20,000 rally is going to be supported by DIIs or FIs is what we want to watch out for. But clearly, after 2 consecutive negative sessions, yesterday's session, as Alex was mentioning, has seen an up move. And it actually managed to shrug off the initial weakness that we saw at the start of the day and continued to see a steady rise in yesterday's session. Barring FMCG, you had all sectoral indices which did see a rally, and the markets are expected to continue this northbound journey with phases of consolidation. That's what analysts are alluding to. From a technical perspective, if you go to see, the support is clearly at 19,500 to 19,550, and on Bank Nifty, if you go to see, a close above 45,695 can lead to initiation of fresh long positions, and you have 45,300 that continues to act as a strong support level for Bank Nifty as well. If you see in terms of the open interest addition on Nifty, that is indicating a buildup of fresh long positions, and the FPIs have been liquidating their long positions since the 21st of July, after actually Nifty hit an all-time high of 19,992 on the 20th of July. Now, put writing has been observed at 19,600 followed by 19,700, and which this is indicating that there is downside support, and that is getting stronger as well. If you see, the highest put OI at around 19,600 and the highest call OI is at 19,800 as well. So clearly the support is getting stronger, though the FIs are liquidating their long positions. What this would mean from a DI perspective is going to be interesting, Alex, to watch out for. But clearly there is consolidation, and it's going to be a long gestation till we see that consolidation continue from here on now.
Certainly. And in fact, yesterday, for the most part, like you were pointing out, we were trading in a narrow range of just about 110 points for the benchmark Nifty 50. Towards the end of the session, you saw that expand and move all the way to 160, 170 points. And we ended very close to the higher point of the day. But there is one stock that we are focusing on at the start today, and that is Maruti Suzuki, on account of its earnings, of course, but also on account of an announcement that was made yesterday with relation to the plant in Gujarat, which is owned as things stand by its parent, which is Suzuki. We've got Vinay joining in to tell us about the earnings as well as the rationale behind the move to acquire that plant. Vinay, good morning. What do you have for us?
Good morning, Alex. Thanks for that. Maruti Suzuki's earnings were mostly in line with the estimates, as we expected that the higher sales and the higher share of SUVs within that sales will drive the earnings. So the earnings rose more than twofold to 2,485 crores. And the similar rise we saw in revenue as well, it rose 22% and EBITDA rose 56%. But the EBITDA margin was a little bit lower than what was expected. So Street was expecting it at 10.2%, but it came at 9.2%. So maybe there could be a impact of higher advertising spends as Maruti Suzuki has launched new models like Jimny and Fronx, which it has advertised quite heavily. So there could be an impact on margins because of that. Other than that, you can see that the domestic sales were 9% higher, and it had offset the limited the impact of the decline in exports by 9%. And another announcement that you talked about, that they are looking to acquire the Gujarat plant now. So the rationale behind that, Mr. R.C. Bhargava, the chairman of the company, said in the earnings call that because electric vehicles are going to be made there in the Gujarat plant, which is owned right now by the parent Suzuki Motor Corp. So they thought that after 3-4 years, when they really get into electric vehicles, and the manufacturing will take up shot up will be higher significantly in the 3-4 years, because the demand will be higher. They would like to have an expertise, the know-how, or how to make that product optimized to the customer's point of view. So another rationale behind taking over that plant is that the parent Suzuki Motor Corp already has its hands full with the battery plant that they already are setting up in the Gujarat, and another R&D center they are looking to set up. So their hands are full, and they are more than occupied to oversee the Gujarat plants running. So because Maruti Suzuki is looking to double its volumes to 4 million units by FY31 from 22 2.2 million right now. So because Maruti Suzuki is looking to expand this manufacturing base, and because Suzuki Motor has his hands full, they are looking to acquire this plant now.
Thanks, Vinay, for getting us the details on this. Stay with us before we come to you on the auto sales numbers. But clearly, Alex, it's going to be an interesting move, because back then in 2014, 2015, when they had signed this contract manufacturing agreement, they clearly indicated that this transaction, if ever happens from an acquisition perspective by Maruti, it will happen at book value, right? So that's an interesting aspect that we need to consider. And I was just reading a couple of reports which have actually been indicating excuse me, the potential book value that they're considering is around 12,755 odd crores. The acquisition is expected to be completed by end of FY24. But this is an interesting space to actually look at as to why this was done earlier, and now they're again looking at the
So that's exactly
acquisition.
my question, because when they did the announcement, I so happened to be reporting on the auto sector at the time, and there was a little bit of uncertainty as to why Suzuki as the parent was coming in to set up a manufacturing plant in a geography that is dominated by Maruti Suzuki, its subsidiary, which is the largest manufacturer of automobiles as things stand. And Sajith was just pointing this out a short while back. In the last quarter, I believe about 40% of the volumes coming from that plant. So it is a significant move in terms of that acquisition. What was the rationale when they made that plant, and why are they transferring it right now? Perhaps we'll get more clarity from the company or from the analysts that track this
Absolutely.
space.
And if you see in terms of the brokerage reports as well, what they're indicating is few of them are expecting this to be EPS accretive. Few of them are expecting this to actually be a
Negative,
downside
yeah.
to come in terms of the EPS. So it's a pretty
Not-
mixed
not
view coming
clear.
in so far. So let's watch out for Maruti pretty closely in trade today, because the next target that everyone is watching out for is something above 11,000. It's already hit a milestone of 10,000 in 2023. So it's going to be an interesting one to watch out for. But apart from that, the auto sales numbers that will start trickling in today as well. Vinay, what do you have for us? What's the expectation with regards to the July numbers?
So the trend that we have seen in the estimates that have been compiled from three brokerages, so it has been a story of the story that we have seen continuing playing out in the different segments that we have seen. Because in passenger vehicles, the small car segment has been slowing down, and because of that, you can see that M&M Cars is the M&M company which is making SUV mostly. It is clearly outperforming all the peers, where the volumes are expected to be 13% higher in the month compared to the previous year. And so Maruti Suzuki and Tata Motors is lagging there, because they have some share of uh, small cars there in their portfolio. So among the two-wheeler companies, if we see, Eicher Motors with their Royal Enfield brand is clearly outperforming all the peers, because their sales are expected to be one-third higher than what it was last year. And the slowdown that we have seen in the entry level bikes, it is clearly affecting Hero MotoCorp. But the sustained recovery that we have seen over the last 2-3 months is playing out right now also, because Hero MotoCorp's sales are going to be around 5% higher than the numbers last year. So it has been really the continuation of the story that has been playing out in both the sectors. So if we saw in the commercial vehicle sector, the pre-buying that we had seen in the March quarter because of the anticipated price hikes that were coming in because of the new emission norms. So the impact of that seems to be receding now, because the commercial vehicles companies are looking at higher sales this month after experiencing a little bit of slowdown in the last 2 months. So that's that for the auto pack.
Absolutely. Thank you so much, Vinay, for summing that up for us. We'll come back to you, of course, over the course of the next couple of days to get updates on those individual companies and the sales that they disclose. For now, let's turn to earnings. It is earnings season, and as I pointed out in the recent past, just another couple of weeks left for companies to report their earnings. Himansh is joining in with a whole list of companies that he's tracking. Himansh, good morning.
Good morning.
What do you have? What are the key takeaways?
So we have Petronet LNG posting their Q1 results, and while the revenues were down, the EBITDA margins improved on account of increased utilization of the Dahej LNG plant in Gujarat. The higher than expected Dahej volumes from the plant and the lower operational expenses as well contributed to this EBITDA margins improving. As per reports, the Dahej utilization was at a strong 98% versus the 88% estimated by analysts. Power Grid also posted their results. While revenue growth was marginal, on an operating level, margins improved. The profit being down suggests higher financing and other costs being incurred. The company also announced a bonus issue of 1:3. So for every 3 shares held by a shareholder, you get 1 more. And along with a 12,000 crore issue of fundraise in the domestic market by issuing bonds and debentures through private placement. Then we have Bosch. The increase in revenue noted was mainly due to the increased sales of exhaust gas temperature components in their passenger cars, passenger and commercial vehicle segments, and the outperformance is expected to continue, is what the management commentary has indicated. Keynes Technology also posted their results. The IoT solutions electronics manufacturer reported a down of 18.4% in revenues on a sequential basis. The company witnessed strong demand from industrial, railways, and aerospace sectors, and the company's order book stood at 3,000 crores. Which gives a strong visibility for revenue accretion down the line. Lastly, we have Som Distilleries, where the revenues were up about 50% at 385 crores, and net profit was also up 30%. So the company also updated the exchanges on hosting an extraordinary general meeting on August the 5th. So we'll see what the company has in development.
Absolutely. It's going to be interesting to watch out for, because all your alcohol companies, hotel companies, all of them are going to be in focus this year, because you already have India who's hosting the World Cup. Plus you have, a lot of other events you have the G20 as well. So the consumption space is something which is expected to pick up. So these are sectors which will see a benefit as well. Thanks so much for getting us the details. But apart from this, a lot of other names that reported numbers, post-marketers was Adani Transmission, Oberoi Realty, JBM Auto, and an interesting fact that we've been tracking. In fact, Saloni is getting us more details on it. Saloni, good morning. How do the numbers look like?
Good morning. So first we've got Adani Transmission, that is Adani Energy Solutions now. So the revenue from the company's generation, transmission and distribution business increased over 20% from over a year ago, while the revenue from its trading business is almost negligible now versus over rupees 80 crore a year back. The company has seen a significant drop of over 450 crores in its expenses, and the net profit has risen 8%. Next, we've got KEI Industries. So the expenses of the company have risen almost rupees 2,000 crore in a year, and the revenue, EBITDA, and net profit have seen low double-digit growth in the past year. Third, we've got HG Infra. So the company is seeing an increase in its expenses, specifically in terms of the cost of materials consumed, contract and site expenses, and employee benefit expenses. The net profit has grown at a healthy rate of 37.4% over a year. Then we've got JBM Auto. So the revenues of the company are up by over 9%, EBITDA is up by 38%, and the net profit has grown by 16.7% over a year to rupees 30.28 crores currently. And lastly, we've got Oberoi Realty. So this is the only company in the list that has seen a decline in its revenue, EBITDA, and net profit. The company has seen a decline in its revenue from projects while seeing a rise from its revenue from hospitality, rent, and property management. And the operating margin currently stands at 52.06%, which is more or less similar to what it was a year back.
All right. Thanks so much, Saloni, for that update. These are all stocks that you should watch out for in trade today. Now, a pack that Hiral has been in focus for multiple reasons. It has done incredibly well for itself over the past several quarters, earnings-wise as well. This is the chemical space, and there's a lot that is playing out globally. But interestingly, the most recent updates have to do with headwinds in the sector, because global players have announced that there is an issue with demand trends. Varsha is joining in to give us some perspective on the latest earnings and whether or not that worry on the global front is being borne out for the domestic companies as well. Is that the case?
Yes, so you see a bunch of companies have come up with results. This specialty chemical companies and agrochemical companies. Now let's look what is the reason behind the headwinds and why these companies have not posted good numbers, except Best Agro Life, which we'll see why the company has got good results. Now starting with Navin Fluorine. If you see, the numbers were not good, especially net profit was not good. So the numbers were really bad and not according to the estimates. Now the reason is the refrigerant gas business was down. Now what is refrigerant gas? It is used in your ACs basically. So the refrigerant gas segment was down, and due to this the HPP revenue was impacted. Also there was this weak summer. Due to this, the refrigerant gas business was impacted. Also, if you see the net profit of Navin Fluorine, so the net profit was really down. Now, one of the reasons is because of high depreciation and finance cost that this company has. Even if you see recently, SRF has also posted results. The refrigerant gas business was down due to the same reason, weak summer. Now, the bunch of agrochemical companies have also come up with the results. You have got UPL, you have got Sumitomo Chemicals and Best Agro. If you see, the numbers of UPL and Sumitomo Chemicals were really bad. Now, the primary reason is what is happening is there's a lot of inventory sitting into the system. So there's destocking happening. And also the raw material price, if you see, have gone down. So when your raw material price is down, the sales realization, the prices of end product will also go down. So your sales will go down. Also, if you see, the inventory which is sitting into this company's balance sheet is at really high prices, and the raw material prices have gone down. So this is one of the reasons there's this pressure in the EBITDA margins of these companies. And also, if you see, this dumping of products has been happening from China. Now China is back, and there's no demand in China, and due to this, what is happening? China is dumping products into India and into other countries. This is also one of the reasons the global companies have slashed down their guidance, because they are not able to match up with the prices that China is coming up. So I would say the Q1 and Q2 for these companies will be really painful. Things will start looking better from H2 of FY24. But if you see the Best Agro results, now Best Agro has come up with a really good results because of the seasonality into that business. So Q1 and Q2 of this business is really good because of the kharif products that they are into. So this is because of the seasonality effect that the numbers were good, which was already highlighted by the management.
It's a very interesting space to watch out for from a specialty chemical business. But apart from this, a lot of other stocks that continue to remain in focus in today's session, in terms of not earnings, but these are newsmakers. In fact, one from the chemical space is Vishnu Chemicals. Also, we should be watching out for. In fact, Rishi will be coming in to get us more details on Vishnu and other stocks that are in focus. Rishi, what do you have for us?
So Vishnu Chemicals, as you said, it has received the board's approval for allocation of about 57.9 lakh shares to QIBs, and this is at an issue price of 345. So this price is at a 2.3% discount to the floor price that was set by the board. Now, SBI has raised about 10,000 crore in infrastructure bonds for funding its infrastructure and affordable housing segment, and the coupon rate for this is at 7.54%, and this is for a tenure of 15 years. Ease My Trip, it has it is going to acquire about 51% stake in 3 travel tech companies, which is Guideline, TripShop, and Duke. And they have said that they'll pay this by issuing equity shares. Now, the airline space is also in focus. The DGC has given approval to Air India as well as Indigo for importing aircraft. So recently, they had given about 500 and 470 aircrafts worth of orders. So they'll be able to do that now with the approval. The South Indian Bank has agreed to raise 1,000 crores via QIP, FPOs, right issue, and other methods as well. It will also raise an additional 500 crores via debt. RVNL has got 2 orders that are combined worth of 332 crores for packages 16 and 17 from the Madhya Pradesh Purva Kshetra Vidyut Vitran Company, which is basically the state electricity company. And this is so for each of this, the split of the order is 150 crores and 180 crores respectively. Now, then the oil and gas segment is something that's going to be in focus today. So the domestic natural gas prices have been raised to $7.85 per million British units, and the IOC has also slashed the Delhi LPG prices by 100 rupees, and it has been slashed for other cities as well. The windfall tax has been introduced by the government, and it has been raised to 4,250 rupees per ton from the previous 1,600 rupees per ton. And the windfall tax on diesel has been increased to 1 rupees per liter. So the context for this is that the crude oil prices have been surging over the past month, and it has also crossed the $80 and perhaps the $83 mark as well.
It's interesting, Alex, to see, right, the way crude has been moving. Thanks, Rishi, for getting us the details. But crude, it's already seen that $85 per barrel mark, and with the OPEC continuing to, control the supplies by the cuts, let's see how further it can move up from here on.
No, certainly, and there are few countries or producers that don't fall under the ambit that could move the needle a little bit. But so far, you have seen a little bit of a coming off of Russian supplies, which I think is also moving along the lines of what OPEC Plus wants to do in terms of controlling that supply, and also China coming in with increased supplies. Not necessarily that, but the possibility of better economic growth there, which is leading to the expectation of more demand. Yeah.
So watch out for the paint companies, watch out for the OMCs, because all of these do see even immediate sentimental reaction as well. But apart from that, one last talk, Alex, I want to talk to you about is a DLF, a block deal that is expected in the next couple of minutes. The promoters are going to sell around 2.16 crore shares, which is almost 0.87% equity via a block deal. Now, the price is 503 per share, which is a 3% discount to yesterday's closing price. Axis Capital is the sole broker to the block deal, and overall, the stake sale is worth almost around 1,086 odd crores. It's going to be interesting to see how the stock reacts, because on a YTD basis, DLF has given you returns of almost around 35 to 36 odd percent, right? And it's the real estate space which has been on an uptrend since COVID. What this block deal would mean is going to be interesting to watch out for today.
Certainly. And in fact, the real estate sector booming at a time when interest rates are at pretty elevated levels. And now we're talking about when that falls, what happens to real estate demand. But that's a conversation for another day, where at the end of this edition of Trade Talk, it's been an absolute pleasure bringing it to you. Do stay tuned. Lots more coming up over the course of the day. And this is BQ Prime.